Hi, I'm Kalilah Reynolds, and welcome to another live edition of Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. And guess what? Santa K's giveaway show is coming up on Thursday, December 15th. Santa K is coming to town. Santa K is coming to town. Santa K is coming to town. I have, all right, so of course, masterclass giveaways, t-shirt giveaways, that's the easy stuff. Burna Boy VIP tickets, a night stay at Villa Ronai. We've got a $500 Amazon gift card to give away. That's right. I didn't say 50. I didn't say 5. I said $500 Amazon gift card to give away. We have prizes and surprises galore. So many awesome gifts. You do not want to miss Santa K's giveaway show right here on Thursday, December 15, 8 p.m. And you're going to need this. I hope you have marked your calendars. The link is already up on my YouTube channel, so set your reminder for Santa K's giveaway shows. We're also going to be hitting the streets and doing some giveaways on the road, and that should absolutely be fun. Look out for that across all platforms. Make sure you're on the newsletter, KalilahReynolds.com/newsletter. You're subscribed. And of course, hit the like button. Subscribe to this channel if you haven't already, so you can get those notifications. Now, let me know in the chat, where is everyone joining us from? And also let me know, is your Christmas tree up yet? How's the Christmas coming? Now, here's a look at what's coming up in tonight's show, followed by what's hot in business. And of course, come on, let's get this money.
Jamaican insurance companies are being pressured to raise their rates. But why? And what does this mean for your insurance? We'll find out from Managing Director of BCIC Insurance, Peter Levy. And the analysts weigh in on the latest market developments. What stocks should you watch for in 2023? And in the U.S., the Federal Reserve is keeping rates at their peak throughout 2023, making a recession very likely. But first, here's what's hot, brought to you by JMMB Group, your best interest at heart. Founder and former CEO of cryptocurrency exchange FTX, Sam Bankman-Fried, has been arrested in the Bahamas. FTX, which was the world's second largest crypto exchange, is based in the Bahamas. The company filed for bankruptcy last month. Following its collapse, it was revealed that Bankman-Fried and his associates appear to have used customer deposits with FTX to prop up his other businesses. The U.S. government filed criminal charges against the former CEO, which led to his arrest in the Bahamas. Authorities in the Bahamas said the U.S. government is likely to request Bankman-Fried's extradition. Some $200 billion in banknotes in circulation will be replaced over time as the Bank of Jamaica gets ready to introduce new notes. The new money is expected to be more durable and accessible. The BOJ said that as of November, there were 252 million notes worth nearly $200 billion in circulation. $161 billion is in the hands of the public, while $43 billion is held in banks. The central bank said an equal amount of the redesigned currency is available to replace the current series. The new notes are expected to begin circulating later this month. JPS is planning to roll out 10 new electric vehicle charging stations in 2023. The charging ports are part of the government's push to reduce Jamaica's greenhouse gas emissions by 10% by 2030. Earlier this year, the government announced a reduction in the import duties on electric vehicles from 30 to 10%. They also waived registration fees on vehicles that are 3 years old or less for the next 5 years to help encourage Jamaicans to buy electric vehicles. Guyana has launched the first auction for the development of its recently discovered oil blocks. President Dr. Irfan Ali said that all 14 offshore oil blocks are up for auction. He said the government is hoping to award new contracts by the end of May 2023. The bidders will have to pay a $20,000 participation fee. Guyana's offshore basin has been called the world's fastest growing superbasin, with estimated revenues in excess of 25 billion barrels and over 11 billion barrels in reserve. The deadline for bids is April 14. The Bank of England is expected to raise interest rates by 50 basis points to 3.5% next week. This would take the United Kingdom's interest rates to their highest level since the global financial crisis in 2008. This follows last month's increase of 75 basis points, which was the bank's highest single increase since 1989. The UK's interest rate sat at just 0.1% between March 2020 and December 2021 and has steadily risen since. The hikes come as the Bank of England tries to curb rising inflation caused by higher energy prices linked to the war in Ukraine, labour shortages associated with Brexit, and supply chain disruption since the pandemic. What's Hot was brought to you by JMMB Group, your best interest at heart. This segment of Taking Stock is brought to you by Bulwark Insurance Agency, Insurance Made Easy, and Real Estate Hub, your one-stop technology ecosystem for everything real estate.
All right, welcome back. Welcome back. Let's see who is joining us this evening. Who was our first commenter? That honor goes to Kish Lindsay, who commented that England is out of the World Cup. But of course, you still have Taking Stock. Yes, so you still have entertaining and educational, informative, I almost said television, but video to watch right now. James, I think, is in Russia. I don't think he's supporting Russia because they're not in the World Cup. Moses says, checking in from TNT, let's get the money. Michael says, Portmore in the building, and also saying everything going up for Christmas. Has that been your observation, that everything just much more expensive this year for Christmas? Adrian joining us from St. Mary. Let me see who else we have on. Elaine is in the British Virgin Islands. QB Coolholic agreeing. Everything going up except my paycheck. Let's get this money, yeah? Romario is in Kingston, and Ingrid says, good evening, let's get the money. Elaine says, I need to move to Guyana. You know, big money is in Guyana, and we're doing some things in Guyana very soon as well. Look out for that next year. And Roswell healing up everybody from Unity Hall in St. James. Let's get started with our show this evening. And as you would have heard, it's all about insurance, because we did say, and who said it just now? QB Quillholic said everything's going up. Well, yep. The finance companies that cover the risks taken on by local insurance companies, these are called the international reinsurers. They are demanding that Jamaican insurance companies raise the insurance coverage rates. Got it? So Jamaican insurance companies actually are insured, and their insurers are called reinsurers. The reinsurers want Jamaican companies to raise the rates. But why? And what does this mean for your insurance? Let's find out from Managing Director of BCIC Insurance, Peter Levy. Hi, Peter.
Hi, Kalilah. Thanks for having me.
How are you doing? Welcome back.
Thank you very much. It's nice to be back.
It's been about a year since we've had you on the program talking about related issues.
Yes.
So let's talk about this issue now facing insurers and the whole thing with the reinsurers. Explain to us what role reinsurers play pertaining to insurance companies. Just break it down for us.
Sure. And as you correctly said, reinsurers insure insurance companies. And so the whole concept of insurance is spreading risk. Everybody pays a little bit of money every year to spread the risk around that whole set of customers, and then any of those individuals who have a loss during the year, the insurance company pays them for the loss. We have to spread the risk that we accumulate in Jamaica to other countries and other companies who have much bigger balance sheets. The fact is that Jamaica and the Caribbean generally is subject to significant catastrophe exposures from hurricanes, obviously earthquakes, volcanoes, and the economies are small, and so they don't generate enough premium income to absorb those potential losses. And reinsurers who are based in all over the world, mostly Europe, North America, but also South America and Asia, take risk from all over the world, and they spread the risk around that way. So if there's an event in the Caribbean, they have premium coming in from all other parts of the world, so they can cover that loss. So they help us to basically spread the risk around geographically.
All right, so let's just be clear. Kish has a question. Kish wants to know, is that for property or vehicle? What type of insurance does this affect?
So primarily what we're talking about today is property insurance. So that is both commercial property for buildings and contents and stock and so on, as well as for residential, for buildings and contents.
Okay, and Empress saying that her car insurance doubled this year. Doubled. Wow. All right, so let's break it down. What are the complaints that reinsurers have?
The price of insurance has been declining over the past 5 to 7 years in Jamaica and in the Caribbean generally as a result of competition. So there's been ample supply of insurance and reinsurance. And so the sellers of insurance have been competing for the business to try and grow. And that's driven prices down. Reinsurers are concerned about a number of factors that we kind of have a perfect storm where we have the inflation that's affecting kind of economies worldwide. So that's driving up the cost of repairs and the cost of building and repairs and so on. You also have increase in the number of significant storm events. You know, we have climate change causing not just increased number of storms, but also their severity. So a couple of years ago, there was a storm that kind of went from a category 1 to a category 5, more or less overnight. And that just didn't used to happen before. And this year we've had a couple of events. We've had Hurricane Ian, which hit Florida, did a lot of damage there. They had hailstorms in France, and these reinsurers get affected by that wherever you have significant weather events anywhere in the world. So climate change is kind of driving up the frequency of those. And then you have the general economic conditions with higher interest rates mean that the reinsurance companies' balance sheets, to the extent that they were invested in equities, the value is depressed because equities markets are struggling. And also the value of their bond holdings would have gone down as new bond issues come out at higher interest rates. If you're holding a bond at a lower interest rate, the face value of that bond, the market value of that bond goes down. So you have a contraction in supply, and at the same time, you have more threat from climate-related events. And in Jamaica, we're seeing, of course, a fair amount of demand from the new buildings that are going up. And so it's a massive kind of contraction of the market. And the reinsurers are, you know, they can pick and choose. You know, in the banking sector a few years ago, we were hearing all about de-risking, and international banks were being very careful about where they did business and what kind of requirements they had for correspondent banks. This is the same sort of thing. Reinsurance companies are de-risking, and they're saying, well, for the premium we get from the Caribbean and the risk that we're exposed to, we don't like that balance. And to stick around, we're going to need more premium to make it worth our while.
What? All right. So these insurance companies, like you said, are de-risking. But then this is the whole point of having insurance to begin with. So what kind of ripple effect would these cause if the reinsurers just pulled out of the market?
So what we're seeing is potential reductions in capacity. I mean, what we're trying to do, most companies in Jamaica renew their reinsurance arrangements 1st of January. There are a few of them that do it at other times, but most of it is 1st of January, which is why it's so topical right now. And what we're trying to do is trying to secure capacity, secure the reinsurer's commitment to remain with us into 2023. To do that, they are looking for higher prices, significantly higher prices. And we don't know where it's going to end up in terms of whether we'll be able to convince all of our existing reinsurers to participate at the same levels that they did in 2022. Another factor in it is that a lot of them are from Europe, and the euro is weaker against the dollar. So if they had 100 million euros for the Caribbean, that would have been worth 120 million US dollars at the start of this year. Now it's worth 100 million. So they've lost 20% just from the rate of exchange. So again, that's one of the kind of elements in that perfect storm. Some of it is temporary, like the inflation, hopefully, and that currency situation. But I do think that we're going to have so what it looks like we're going to have is kind of a sharp increase in pricing for 2023, and it started already actually. And then I think that's going to attract some of the reinsurers back into the market, and we're going to have probably settle at an equilibrium somewhere more expensive than it is now, but hopefully lower than what it might initially go to in the next few months.
So about how much of a price increase are we looking at?
We are looking at significant increases for the commercial book in particular. I mean, none of it is easy to swallow, but we're looking at somewhere between kind of 30-40% for commercial property.
Wow.
And trying to keep the residential increase down to a bit more manageable 15%.
Oh man. All right. So and related to that, what kind of cost increases are you facing from the reinsurers?
So we're expecting at least 15% increase on what we pay, but also they require us to deliver a certain price because some of the business just passes through from us to them. So if we don't get the right price from our customers, then they won't want to do business with us. So we're looking at higher costs. We're also looking at what we can do in terms of keeping more risk. You know, when reinsurance was cheap, it was easy to pass risk on to them. But now that it's expensive, one of the things we're going to have to do is look at retaining more risk on our balance sheets, not to the extent that it would be a threat to our survival. I mean, the FSC does a really good job of constraining us from taking too much risk on. But there is some margin there that we can take more risk and kind of insulate the most extreme kind of level of price increases. But it will be a small margin that we can save that way for the end user.
So Let's sounds like they're upset that they're having to do their job. Would you say that's a fair assessment?
Well, I think you're pricing risk, right? And if the situation or the conditions change such that the nature of the risk has changed significantly, you have to reprice that risk. You know, if you're making loans and the default rate in your market goes up by 50%, you're gonna have to put your interest rates up. So, you know, I mean, I'm upset because, you know, we've worked really hard to grow our business and to provide, you know, our mission statement is provide peace of mind to our customers. And the last thing we want to be doing is to kind of dumping a huge increase on them. So that's not what we like to do. But these are the conditions we're faced with. And, you know, when the oil market has a shock and the supply constricts suddenly, as it did in the Ukraine situation, along with the opening up of world economies so that you had an expansion of demand, then you have this shock and the price kind of doubles or triples. So these things happen in kind of world markets, and we're unfortunately at the wrong end of one of these situations.
Yeah, unfortunately, climate change is real, guys, and here are some of the impacts that we're having to face. I think StrongLink is summarizing it quite well, saying insurance is a business, so when claims are so high, the insurance companies won't be able to honor them unless premiums go up, and this ripples through the economy and adds to inflation. Yeah. And then Kish has a question for you. He wants to know, is the insurance on mortgaged residential properties cheaper than properties without a mortgage?
I think generally speaking, if the mortgage company, if the bank or building society can negotiate terms using, you know, buying power, basically the fact that they are managing a large portfolio of insured properties, they generally can negotiate, you know, with a bit more leverage than an individual buyer. But I think I wouldn't like to generalize because different institutions have different arrangements. So it's hard to answer that one kind of across the board.
There's another issue that I wanted to bring up with you since I have you on, Peter, another important one, and it concerns Germany's new legislation called the German Tax Haven Act. Can you explain what that's all about and how that could impact us?
How long do you have? All right, so I'll try and give it the short version. So Germany, the EU has a blacklist and a grey list of countries that are not behaving themselves in terms of taxation, according to the judgment of the EU. And a lot of this has to do with creating tax havens. In other words, jurisdictions where taxes are lower, and those jurisdictions try to entice businesses to set up there to take advantage of the lower tax. It's a very common practice that's been going on for decades, and there's been some movements by the bigger countries, especially the richer countries, to try and fight back against it. So the EU has this they have a blacklist and a grey list, and the blacklist, we're not on the blacklist. We are at last count, we are on the grey list, and we were on the grey list because of some legislation we had with respect to special economic zones and some tax arrangements there. And we negotiated with the EU not to go onto the blacklist on the basis of a commitment to remedy that situation, to remove whatever that element of the special economic zones legislation was that they didn't like or didn't approve of. So that existed for a while, and then Germany passed a law, which they're the only European country that has passed a law that kind of adopted every recommendation of the EU committee that looks at this stuff. And included in that were some withholding tax penalties, where if a German company is paying money to a person or company in a blacklisted country, they would have to pay 15% of that amount to the federal government of Germany, which obviously would not have been good for. We have German reinsurers actually do a lot of business in the Caribbean, and so you can imagine if you have a catastrophe and they're paying out, millions, maybe billions of dollars in claims, having to take 15% off the top and pay to the federal government of Germany was not something that they were going to be too thrilled about. So, so we were worried about that because they actually stopped doing business in Trinidad because Trinidad was on the blacklist.
And you said Jamaica's on the grey list right now, so we're not quite, and we're hoping to get off the grey list as well.
Right, and what we understand is that the government passed that amendment in October. I think it was in the late September in the lower house, and passed the Senate early in October. So we, assuming that they did enough, and I'm hoping, and I'm going to give them the benefit of the doubt that they did their homework. It's just for the EU committee now to formalize it and remove us from the grey list, which they meet in February. So what that means for right now is we think we're okay, and we'll know for sure when that meeting happens in February. But at a minimum, we can get through the renewal of our reinsurance treaties without having that on top of everything else.
So we don't have any consequences per se for being on the gray list, or at least not to the extent that we would if we were on the blacklist.
No, there are no consequences that I know of from that. You have to get onto the really naughty list.
the naughty list. So let's talk about property insurance, which we have been talking about throughout the program. But can you say, on average in Jamaica, how many people have property insurance? So how many people would these rate hikes affect?
It's one of the things that worries me, the fact that whenever the price goes up, people who don't have mortgages or have their house or building used as security have a choice to make, and some of them may choose to opt out of the market, and some of them just may not be able to afford it. When I say that, I mean, obviously, you have to manage, you have to budget and balance your expenses. And the question is how high a priority you make it. In a time of climate change, I think you want to be thinking a little bit more about the possibility of a serious hurricane hitting than in the past. But so it's hard to tell what I don't have numbers on what percentage of the insured population doesn't have a mortgage. Those would be the ones who would be the most likely to struggle to continue with insuring their premises. People, the mortgage companies and the banks and so on, they require that the place be insured to have security, and commercial entities will also usually be able to manage their expenses a bit so that they can manage to pay their premiums. They may choose not to buy other types of insurance that they consider non-essential. But one of the things that we want to, last time I was with you, we were talking about premium financing, and we got I think a good understanding with the FSC, whereby they're no longer kind of saying we're not sure that you should be doing it, and now they're saying we need to make sure that your disclosure meets the right standards and that, it's transparent to the customer and so on, which we're happy to do. So that's an option that I want to encourage people to consider, because you can get sticker shock if you look at the annual premium and how am I going to pay that? But if you stretch it out over 8 months, 9 months, 10 months, then it makes it a bit more palatable. So that's one of the things that the individual can do to try and soften that blow.
So you don't necessarily have to pay the entire thing all at once. You
Right,
have
yeah.
options.
Yeah.
All right. So as the Chocolate Dreams was mentioning, without a mortgage, the choice is yours to decide whether you will have insurance or not, which is what you were mentioning,
Yeah.
that people who own their property outright without a mortgage, this is one of the things they may decide to cut back on, and they may decide that they want to take that risk.
Yeah.
Kish is also saying that without a mortgage, you may have to find the money in one go, which can be very expensive. And you're saying not necessarily. You
Right.
can actually spread that out over several months. So that's good to know. All right. So last time we were here, like you said, we were talking about motor vehicle insurance premium financing. Has there been an increase in motor vehicle insurance rates recently as well? I saw that person early in the program saying that their insurance has doubled.
Well, I mean, some companies have put up prices for some products, and one of the things that is driving that is inflation is affecting car parts, and supply chain is affecting car parts. And so we found that the cost of repairs is certainly up. For some models, particularly the kind of the more high-end vehicles, we're seeing increased costs of like 30 to 35% this year. So that's going to drive up the cost of claims, which we're going to have to recover. But we also, at the same time, certainly BCIC has seen better results from certain segments of the portfolio. So our third-party portfolio is actually doing pretty well. So when we did a price adjustment recently, we did put up some more prices on comprehensive, but at the same time, we came down a little bit on the third-party policies. So we're always trying to find we're always trying to find where the margin is and price according to to the risk. And if we find that the cost of one product is going up ahead of our expectations, often you find another area where you can seek to grow, and that's what we're trying to achieve, balance that way.
So what's the average increase there at BCIC?
I think on our comprehensive, we're talking about somewhere around 25%.
25%?
Yeah.
All right, guys. Well, everything's going up. Insurance is no different. Another thing that you need to plan for next year, rises in insurance, property insurance, motor vehicle insurance, basically everything. Just know that everything is going up. Thanks for joining us and for explaining what's going on, Peter.
Invite me back when there's better news to share. I'd be happy to come back then.
And I'd be happy to invite you back as well.
Yeah.
Just let us know. Let me know when you have good news, and for sure we'll call you.
Thank you very much.
All right. Thanks, Peter. Let's go to tonight's poll question. All right. Let me find the poll question. What's the poll question, producer? Let me put it in the... All right. Here we go. What do you think of the news that FTX founder Sam Bankman-Fried has been arrested? Yeah, you saw that in What's Hot segment of this program. Sam Bankman-Fried, the founder of FTX, the cryptocurrency exchange that crashed the other day, he's been arrested in the Bahamas. To me, it comes as no surprise. I knew eventually it would probably come to that. But what do you think? Take tonight's poll, and you can take that poll on Twitter or on our YouTube channel. And while you're at it, hit the like button. Up next, we've got your market recap, and the analysts are standing by.
This segment of Taking Stock was brought to you by Bulwark Insurance Agency, Insurance Made Easy, and Real Estate Hub, your one-stop technology ecosystem for everything real estate. Time now for your market recap. The JC Combined Index was mostly flat last week. 127 stocks traded across the main and junior markets for the week ending Friday, December 9, 2022. 55 made gains, 60 lost value, and 12 stayed the same. 305 million shares changed hands on the Jamaican dollar market, valued at $845 million. Radio Jamaica was the week's most traded stock. It took up 78% of market volume with 241 million shares trading. The stock's price remained the same at $1.90. The large volume comes from a transaction by Radio Jamaica chairman Joseph Matalon, who transferred 241 million of his shares to another shareholder following the completion of RJR's deal with 1834 Investments. Wigton Wind Farm was the second most traded stock, with people buying and selling 15 million shares in the company. It lost 4 cents to open Monday at 53 cents. And Trans-Jamaican Highway rounded out last week's most traded. 5 million shares traded and the stock's price remained unchanged at $1.39. Now let's see who had the biggest gains for the week. 138 Student Living Variable Preference was last week's top stock, up 27% to open the new week at $58.65. CAC 2000 was the week's second biggest gain, up almost 19% to open Monday at $8.49. And rounding out our biggest gains, Epley 7.25% preference shares is up almost 18% to open the week at $19.99. On the losing side now, Epley 7.5% preference shares due 2024 was last week's biggest loser, down almost 16%. The stock opened Monday at $6.60. Epley ordinary shares had the second biggest dip last week. The stock was down 15% to open the new week at $32.19. And JP fell 13%, closing the week at $21.06. Over on the Trinidad and Tobago Stock Exchange, there was virtually no change on the composite index last week. Massey Holdings was the most traded stock. It opened this week at $4.50 TT. Prestige Holdings was the market's biggest gainer, up almost 6% to open this week at $6.66 TT. And on the losing side, Grace Kennedy fell 13% to open Monday at $4.12 TT. It was a rough week over in the U.S. The Dow Jones slipped 2.5%, while the S&P 500 and the Nasdaq were both down 3%. At the pumps, motorists continued to get small wins last week as gas and diesel prices all fell a further $4.50. In foreign exchange, it took an average $154.34 Jamaican to purchase $1 last Friday. That's 18 cents less than a week before. Meanwhile, it took an average $114.09 Jamaican to purchase $1 Canadian. 1 British pound cost on average $189.02 Jamaican. And you could buy €1 for $165.56 Jamaican on average. Finally, on the crypto markets, Bitcoin made a small gain last week, up 1%. The cryptocurrency traded at $17,120 on Friday. It was the same for Ethereum, up less than 0.5% last week. It traded at $1,262 on Friday.
This segment of Taking Stock, The Analysts, is brought to you by JMMB Group, your best interest at heart. Disclaimer. This is not intended as financial advice. Please consult a licensed financial advisor before making investment decisions.
Welcome back. Just before we join the analysts, let me give some of your feedback to tonight's poll question concerning the arrest of FTX founder Sam Bankman-Fried in the Bahamas. So let me see what we have here. Strong Link says long overdue. Kish said, good job. He should be imprisoned. Empress says, about time. Long run, shark catch. Antoinette says, no surprise there. And Kish says, 1 million investors defrauded. Strong Link added that even Shark Tank's Kevin O'Leary says he lost big through FTX, but he also got paid heavily to promote them. So in Strong Link's view, Kevin really lost nothing. All right. So I'd like to keep your opinions coming in the chat, and let's see what we're going to talk about this evening. It's time now for the analysts. I'm joined by Clive Charlton, equity trader at JMMB and CEO of Profit Jumpstarter, Keisha Bailey, two of my favorite analysts. Hi, Clive. Hi, Keisha.
Hi, happy to be on, Clive.
Keisha, are you going to Puerto Rico next month?
Gotta be there, yeah. As they say,
I have breaking news for you, Keisha.
Yes.
I'm gonna be speaking at that event.
Nice. All right,
yes, guys. Yes, I applied to speak at the ROI Millionaire Summit in Puerto Rico in January, and I got the email today that I'm gonna be one of 4 speakers selected to present my story. So
nice.
That's gonna be exciting.
That's gonna be exciting. Yes.
Only question I have now is who's gonna host the show, because that's on a Tuesday night.
Well, maybe we'll do it from Puerto Rico. That would be good.
Yeah, but see, usually the last time I had to be away, I asked Keisha to stand in the but Keisha's also going to Puerto Rico. So now I'm like, okay, this is Tuesday night at 7 p.m.
We probably are gonna be.
Who's gonna host the show? We'll figure it out. We have some time. We'll figure something out. All right. So we have a few things to talk about today, and the year is winding down. And Clive, let's look at 2022 in review. And what are you watching for 2023?
Well, we'll start with the macro. I think that is where the topsy-turvy began. On the macro side. Globally, logistically, in terms of resources, imported inflation, and of course, our regulatory authorities had to come in, right? That's Bank of Jamaica, who has who oversees the monetary aspect of the economy. And there has been some tightness, that is increase in interest rate, which of course caused prices further to rise, and a tightness in the general economy. We have seen that, but I think overall we fared well. BOJ's strategy was really a mitigating strategy, that is to prevent the worst. And I believe that they were, and based on the numbers, I think they were fairly successful at that.
Right. So, yes, that has been one of the big stories of 2022, in addition to the whole inflation thing. But on the stock market, what are your highlights for 2022?
Okay. Well, the highlight, of course, is the general decline in on the financial sector, I would say. Increase in interest rate would have a quick, immediate effect on let's say, the balance sheet of financial institutions. The assets of, let's say, a Grace is physical property, land, building, work in progress, inventories. The substantial physical assets of a financial entity are financial instruments. And once interest rate is adjusted, you have to adjust the value of those financial instruments. So that would have had a significant negative impact on the balance sheets of these financial entities. Now, a reduced balance sheet, reduced assets, means a reduced shareholder value. So it would have an effect on the price. It means the ability of them to generate revenue, because there are various reasons, resources, yes, capital, but also regulatory reasons that would have had an impact on them, their ability to generate revenue. That again has an effect on profit and loss, which rides through to dividend. We know a few financial companies have delayed paying dividend or suspended indefinitely the payment of dividend. Right? And then, of course, we can imagine what interest rate does. When interest rate goes up, financial institutions, deposit-taking institutions, their cost immediately goes up again. Why? Because they must pay more on the fund that they get from their clients, from depositors. So it has had some deleterious effect on the financial companies in particular, but right across the board and several other companies. Interest rate affects every single sector, including consumer behavior, right? So, of course, we see several things going up. We just spoke about insurance. Interest rate increase that have affected their cost structure also. Now, the problem that we have just spoken about is really coming from abroad because of an increased risk structure situation coming from, of course, one of it, climate change. But the global issue has also impacted reinsurers, and they're passed on that cost to us, the Caribbean. The insured, yes, especially in the Caribbean. But we have, that will impact financials, certainly. The Iron Rock, Sagicor, and other entities that are insurance related. So we can expect some impact later on. We can analyze that further. But sincere, I would believe that even though prices declined, I think our market have fared better than expected. Certainly, yes. In terms of the indices, let me look at some of the indices figure. I tabled some figures here, if you give me some time. Right? Just broadly, let's begin at the top end of the change in value of the market over the last, I would say, year, yes, but let's look at COVID. Compared to 2019, in 2020, the market in general lost on average probably about 22% of value. By December 2021, the indices, the various indices on the market that measures the different sectors and areas of the listed companies, would have lost about 23 on average, 24% right across the 7 indices. By December 2022, we have recovered some value, but the indices are down roughly 11-12% compared to 2019 December at the beginning of the pandemic. So we have recovered some value up to 2022. As a matter of fact, between 2021, last year December, and 2022, the market has recovered some value. We're still down, but has recovered some value. The financial sector in particular, though, we know have been hit hard, right? And those prices are down, yes.
Yeah. I want to throw that question over to you as well, Keisha. But just before you answer, let me answer this question from George, who wants to know, when will Regency be listing on the junior market? George, I can actually tell you, I got that email today. Regency will be listing on Thursday. This Thursday, as in day after tomorrow. So look out for that listing on Thursday and be prepared for when the market starts to move with Regency. Breaking money news. Regency lists on Thursday. All right, Keisha. So for you, the highlight of the year.
I would say what's happening now, the whole SBF saga. 2022 has been eventful. When we think about tech meltdown and all of these large tech companies falling by 30+%, the US stock market having corrections during the year, having that greater than 20% move, having companies like Tesla down 50-odd%. I saw recently as well that Elon Musk is no longer the richest person in the world.
I just saw that today too. It's now the guy from LVMH, Louis Vuitton.
Yes.
What's that for again? Louis Vuitton, something.
Moet Hennessy, yeah.
Yeah, Moet Hennessy, right. There,
Yeah,
he's now the richest man in the world.
Right. He's Elon Musk has been debunked. So that occurred this year. Russia-Ukraine war, which is ongoing still, that was quite eventful. And of course, what we see now with SBF and the crypto winter, all of the sell-off we're happening, we see there. This has really been a horrible year for risky assets. Equities on a whole have really suffered. Crypto has really suffered as well. It's been a very trying year. Lots of red in our portfolio in terms of unrealized losses. Those have been some of the big headlines for me. 2023 is a whole other scenario, though. We'll talk about that with the Fed rate hike. But bad year, bloody, red year. Hoping that we can see some green for 2023.
Yeah, Strong Link says the number of IPOs on the Jamaican market was significant. Well, when you compare it to 21 and 20, I would say so. How many did we have? What, 6 or 7 this year?
I think it's probably about 6, yes.
I think I remember counting 6 IPOs that we had this year. All right, so Clive, 20.
Go ahead, sorry.
No, I'm about to switch the topic. So if you want to add something,
I see. No, okay. I was just about to say that. In fact, if you look at the junior market index over the last, it was only indices, the only index that went up, appreciated in value between 2020 to 2021 and 2021 to 2022. The only index. All the others, the main, select, composite, combined, financial and manufacturing and distribution, every single one of them went down. It was the only one between 2020 December and 2022 that went up. And it is largely because of the additional capital on the market, not necessarily prices so much, but the additional capital placed on the market. That is through the listings. That's a junior
and the
market.
junior market is where we had the IPOs as well. So we had
all the IPOs.
Jamaica Fiberglass, Edufocal, Dollar, One-on-One, and Regency. So all junior market IPOs we had. And yes, indeed, it was actually 6. I was right in that number. So previews for 2023, Clive, what are you looking forward to next year?
Well, here's what I'm looking at. Let's start at the top end first. We have to start at the top end. That really directs everything. And I think we're seeing the proof in the pudding since 2024, when we began to have some macroeconomic stability, and then the general economy, in particular the stock market, started to do well. So we start there. We start at Bank of Jamaica, monetary policy. They have, we're seeing consistent increase in the base rate. The base rate is what BOJ lends, charges institutions for overnight lending, right? And that adds value as it goes out into the economy, into different products, different type of institutions, deposit taking, etc. Yes. That BOJ says will be tempered. They expect to temper that. They use the word, I can't remember the word, but I would get the impression that, it's not going to increase. And of course, the manufacturing JMEA sent out a notice that was published in the print media that they are happy that that rate will be tempered, so to speak. But as I said, it's tempered. There may be increase in the base rate again, but it may not be that significant of an increase as we saw between 75 and 50 basis points. So that is good. Why would that be though? Because the very basic metric that BOJ uses to determine an increase in interest rate, that has been tempered. That is inflation. In November, I just saw some figures on the electronic media that the November inflation rate turned out to be I think it's about 7.71%, which is below the September figure.
Okay, not bad. It's finally improving.
Right, you see? Right, and so that looks good. The US, the Fed has said that they may not have that substantial increase in base rate again. That is 75 basis points as they did the last 2 or 3 times. But they expect interest rate to keep at the high level, right? So it means that they may plateau or not, drive interest rate any further. That is the Fed rate. That augurs well for the US economy. Again, why is that? Because certain basic metric that they use to guide the Fed as to whether they should increase interest rate or not, some of them seem tempered somewhat. Asset prices are down all over, right? There are some pundits believe that there may be a recession, and if interest rate is kept at that level that it is now, then there may just well be a recession. There was a report it might have been October, November, that real wages, finally, for the first time in perhaps over a year or 2, was marginally down, right? So those augurs well. So if rates doesn't go up in the US or stays plateau or stays flat in the US, it means that BOJ is in a better position to not increase the base rate again. So that augurs well for the market. Apart from that, though, when you look at the statistics published by PIOG and Statin in terms of the productive sector and how our economy is doing, the agricultural sector, which employs a vast number of people, the retail distributive merchandising sector, which again is a major employer of persons, the hotel and tourism leisure industry, is still doing quite well, and then bauxite reopening. Remittance is a little bit down, but still there in terms of supplying us with foreign currency. So far, the various variables looks well, and we might see less distressed, I would think, in 2023. That I would say.
So would you say you're optimistic for 2023 then?
I am optimistic. I'm fairly optimistic. Here's the thing. Prices are down already. Financial stocks especially, which makes up probably about 48% of the value of the index. If you look at the total capitalization of the index, financial stock makes that up. Those prices are at a low now. I don't see them declining significantly much more, right? We have had a few companies. What bad news can we get from these financial companies? We have seen previously with one of the largest financial institutions a decline in profitability from its previous high of profit of about 22 billion. Then this financial year, September, we have seen an even greater increase in profit, nearly 40 billion. That's NCB. Earlier this year, NCB temporarily suspended dividend payment. We've seen a few other financial companies proven, and JMMB, but also Scotia Group. They have continued to pay dividend, but they are paid nominally less. It was roughly 45 cents per announcement prior. It was 35 cents the last announcement. However, they're still paying dividend. The yield on Scotia dividend is quite high. Because why? Because the prices have fallen off to about half its previous high. Traded as high as, I think, $62 in about 2019. It's now trading at about $32. So the dividend yield is quite high. They can afford to pay a little less nominally amount of dividend. Yes. But how bad can it get? I don't see prices declining much further, at least for the financial companies. But I see some recovery next year if interest rates stabilize. Yes.
So you know what that means, guys? Buy now before the price go up. If there is recovery.
Exactly. I don't agree.
You don't agree? All right, good. Let me hear what you have to say, Keisha.
So I think next year is going to be a challenging year. I'm on the flip side of it from Clive. I think a lot of the money that was propped up post-pandemic, a lot of the money that was being poured out by governments into the economy, that money is still floating around this year, which is why we're having a problem with inflation. Come next year, it's going to be a different story. I do believe we're going to see some form of recession in the US, and that's going to have spillover effects then to the rest of the world. And so the Fed is going to announce their interest rate hike tomorrow. What's expected is 0.50%, 50 basis points. But what's more important is the outlook. What is the Fed going to say about the future trajectory of rates? They've already increased their target for their Fed funds rate higher, meaning more rate hikes are coming, but not as aggressive. That means, though, still we're going to get high interest rates, and that's going to have a trickle effect globally because a lot of the central banks across the world have to keep up with the US because the US dollar continues to strengthen with each rate hike. And so other central banks have to follow suit with that. Now, when we think about more rate hikes, more pressure on companies, right? Inflation may come down because the money that's in the economy is going to be pulled out a little bit. People are going to have to go back and work because a lot of the government incentives to stay home are gonna dry up come next year. I believe we're gonna continue to see challenge among companies. I could see stock prices falling a bit more before they start picking up again. So sure, yeah, I guess we can say look to buy, but I don't really know if now is the time. I see more pain before gain.
Ouch. But bear in mind as well, so you two are talking about two different markets. So Clive is mostly looking at the Jamaican market. You're more looking at the US market. So I
feel Jamaica too will struggle, Clive. I feel so because of the spillover effects on the US. Yeah.
So I think the lesson from that then is that if you are investing this year, you need to have a longer term time horizon for when you will reap your rewards. So don't expect quick rewards next year. Clive, you wanted to add something?
Yes, certainly. It has to be long term because there's still a level of uncertainty. Right? Whatever happens in the US, especially where Fed fund rate is concerned, can have an impact on us. You see, if they begin to reduce as they have, or it is expected, the increase, nominal fund Fed rate is still high, yes, but if they do take like a lesser and lesser, not 75 basis point, 50 basis point, 25 basis point, and continue on that, then we may say incrementally less increase in federal fund rate. Many pundits in the US, about half of them believe that there may be a recession in the US next year. The good thing though is that our market, there's a little bit of independence in our market, and the foreign exchange generators, except for remittance, this, I think it was in October, that was down. Over the summer, it was fairly high, right? But the tourism sector, how much of that, do we benefits the domestic economy that is retained in our domestic economy? But those sectors that are revenue generating, that is hard currency generating, is expected to do well. And then also Jamaica has reopened, right? And the projections on that are quite favorable. So there should be a little bit less pressure on our US dollar. And again, I'm just going off what our Bank of Jamaica said, that they may take a little more tempered approach going into next year. But I don't think that is unusual, except for Britain that just had a significant increase. I think it's 50 basis point increase in their base rate. The rest of the world believe that next year it will be a little bit more tempered, right? So yes, there's still a trickle-down effect. I mean, there will not be a sudden recovery of any economy at all. But I think people can look a little bit more favorable going forward. And in terms of prices, stock prices in our market, they are fairly cheap. So average in, you have to have a long-term outlook, and they have to average in, and they have to employ the various risk mitigating strategies when constructing a portfolio. That is, you diversify, you select defensive securities, you look at cash flow, that is dividend paying securities, and you reduce the average cost. So these strategies would have to be employed nonetheless, and extend your horizon. You can't be thinking long term. IPO, AP, and the effect of the junior market is different from the total market, right? So we have to still be cautious in investing. But I think in terms of expectations, there should be some improvement.
Absolutely.
Clive.
All right. Thanks, Keisha. Thanks, Clive, for your input. And I think this is the last time. No, yeah, this is going to be the last time I speak to you for this year, at least on this program. Okay. So see you next year.
See you next year. See you in Puerto Rico.
And be safe.
Yes, be safe over the holiday season. Yes. We are having one more show. This is our penultimate show for 2022. Next week is going to be our final taking stock for 2022, and then we resume next year. We're going to take a well-deserved hiatus for the holiday season. Guys, make sure you like the video and subscribe to the channel. Share the video with a friend. Subscribe to the newsletter. Let's take a quick break and come back.
This segment of Taking Stock, The Analysts, was brought to you by JMMB Group, your best interest at heart.
Hey, moneymakers, you're not an official part of the family until you have your merch. Visit KalilahReynolds.com/store to order your t-shirt and your mask today. Let's get this money. Let's take your final comments. I see Strong Link was asking about bond prices, if they're going to go lower with higher yields. Orville says climate change is a hoax that the elites themselves are promoting. In time, the masses will figure it out. What? You haven't seen the erosion, Orville? You haven't seen the coastal erosion? Is the small island developing states losing, like physically losing landmass? You haven't noticed that? I don't think climate change is a hoax. More hurricanes and more powerful hurricanes more frequently. You haven't noticed that? I don't believe climate change is a hoax at all. Let me see what else we have here. Kish wanted to know if fixed bond rates will be affected. Orville saying the elites are manipulating everything to align with their agendas to take control of our lives. Let me see what else we have. Strong Link saying there must be a limit to how high the feds can push interest rates. It's already very high, threatening a U.S. recession. Then we have Steve saying price is cheap. There's a lot of good deals in the market. Time to buy. So one philosophy there for your investments. Lushan wants to know if I'm doing any giveaways today. Our giveaway show is on Thursday. Tune in on Thursday night right here on YouTube and on Facebook. 8 p.m. I'm giving away all kinds of stuff. I have some gift baskets to give away. I have a night stay at Villa Ranai. We have a $500 Amazon gift card. I wish I could win that for myself. Like, I want to win that. My KRM crew was asking today if they're eligible to win. I had to be like, no, you guys can't win the $500 Amazon gift card. USD, people, USD. And of course, those 2 VIP Burna Boy tickets, my masterclass, Money Mission masterclass t-shirts. We have, like I said, gift baskets. We have some wine, some nice liquor to give away. Where's the list? I need to find that list and tell you guys all the things we're giving away. You can look out for the list on my Instagram page. Tomorrow we'll be posting the full list of giveaways coming up on Thursday, and it's a very nice list. You can even win sales coaching with Hugh Lane Strategic Services, which is, they're actually my sales coach. And trust me, Beverly Thompson is a boss. She knows what she's talking about, and you can win a special sales coaching session with her. So if you are in sales, if you have a small business and you want to learn how to sell, you absolutely want to win that fabulous prize. So reminding you as well that new email subscribers get a copy of my free broker guide. So make sure you subscribe at KalilahReynolds.com/newsletter. You also want to turn on the post notifications so you can see when Santa Case giveaway comes up. You can click onto it right now, actually. Set your reminder so that it pops up. You get a notification. You do not want to miss that show. Now, we want to help people learn more about money so we can all get this money together. Make sure you're subscribed to all of our platforms. We're going to be hitting the streets this week and doing some giveaways on the road. That will be very, very fun. Look out for that as well on the platforms. Follow me on Instagram, Twitter, and TikTok at Kalilah Ray, and follow at KRM_business news on Instagram. Remember, those are my only accounts. I don't have any backup accounts. If you see somebody saying they're a backup account, report that page immediately and block them. I will not ever DM you asking for money to invest in crypto or anything else at all. I don't work like that. Now, if you want to connect with the analysts this week, check the description box below for their contact information. And you can also visit our website, KalilahReynolds.com, for financial information you can use however you like it. You can watch, you can listen to our podcast, or you can read our awesome articles. Now, I want to ask you to do something for me. Tell a friend about taking stock, because investing is the new sexy. So let's make it cool to talk about money. I'm Kalilah Reynolds. Thanks for watching, and see you again on Thursday for Santa Case giveaways.
Let's get this money.